Right. Hello. Hello, hello, hello. Good afternoon, good evening, wherever you're from. From? Have you had a good day so far? Thanks for tuning in. Good afternoon, good morning, good evening. Let me check where all systems go on the stream on TikTok. As you know, I'm starting those, so we just need to check if everything is running smoothly there.
For sales overall, I have seen.
Yes, we are good to go. We are good to go. Hey, Big Deeds, Aaron. Afternoon. Juan, Big Deeds, yo, yo, yo. Melvin, the Lord has risen. The Lord has risen. Share the stream if you're on TikTok. Share and like up the stream. On YouTube, how we doing? Like up the stream. Right, once we're started, as I said, I'm new to this, so, you know, bear with me. Hello, Patricia. You right, Dan? How's it going? Easy now. Easy now. Well, go on, Dan. How's everyone been? Good weekend? Obviously, we weren't live yesterday, so it's the first stream of the week. Hopefully no one got caught in any trades yesterday. We did catch, or I did catch, to be honest with you, a trade on gold this morning on the 1 minute, very quickly. Easy W on the 1 minute time frame. We're looking at potential buys in the next 26 minutes if we close above here. But again, we got that big Jerome Powell speech, you know, Gov Bailey speech as well. Right, give me a sec to put TikTok down. Right, so phone's over there. We're all good now. We're good to go. Like up the stream if you haven't already, guys. It's nice to see everyone here. Actually, let me like the stream on my burner account. Honestly, it's pretty much a chill one today. Like, there is not much to this at all. We've got a Jerome Powell speech in 30 minutes and a Trump speech after it. We can try and get a nice quick scalp on the 1 minute if the PA looks good enough. Hey, Elizabeth, how's it going? Like up the stream, guys. On 11 likes, gets to 20 likes. But yeah, so Jerome Powell's speech, needs to be careful. President Trump's speech as well. We're going to see how that goes, but we're going to try and get a nice quick scalp on one of these pairs if we can. We've got GJ, Bitcoin, and gold. The 1 minute on here could be the move, to be fair. If we get a nice little pullback now, just before we take out this high, that would be a perfect trade. If we're going to we could get a nice AMD setup here on the 1 minute time frame. Hey, Adam, how's it going? Nice AMD setup here, something like this. You know, we inverse it, close above it, take that buy to the high over here, and then be done with our day, for our day. Let me just open my trader. Here we go. Let's see if we can form a bearish fair value gap here. Excuse me. Let's see if we can get a bearish fair value gap form. What we want to see is a nice bearish fair value gap form, then inverse it very quickly. Potentially something along these lines, like this maybe. Take out this low here on the 1 minute. On our way down to do that, we form a fair value gap, sorry. We then inverse that, then we can get in for a nice buy, targeting the high over here. That would make perfect sense. Feel a lot of pain on my back, but it's time to get some money. It is time to get some money for real. Hey, Abir. Hello, everyone. This is what we want to see on GJ. Now, we're going to obviously have jumped quite far ahead there. You know, there's not really much higher time frame analysis to back this up. So if we go into the 2 hour, We got an IFVG on the 2 hour. I don't know why I just jumped to the 2 hour. That's very, very weird. I don't usually do that. On the 4 hour, we have a nice IFVG here, so we should come up and take out this high. On the daily, we have obviously a bullish bias. On the 1 hour, you know, we've got IFVGs here. We're looking to come and take out this high over here. On the 15, we've been pushing up, so we could get a consolidation. I don't think we'll get a pullback down to here, but we could get a consolidation on the 15. I think we will take out this high first. We're very, very close. There's no point going all this way just to stop here. On the 5 minute, we've had a nice consolidation. Looks like we're trying to push up again now. If we go to the 1 minute very quickly, we want to see price take out a low, form a bearish fair value gap if we're going to get an entry on this, okay? Then we can take our entry easy peasy. Which high might that be? On GJ, if we go to the 1 hour, it's this one from yesterday. It is this one over here. I'm going to take this one out. I think it's also a 4 hour high. Looks like we are pushing down here on GJ. Let's get this fair value gap formed. We want a liquidity sweep. There are 2 lows here that we could technically take out. There's this one right here. Yo, Junior, how's it going? Jeez, we're melting down. There you go. We've wicked that low. So we know all we need to see now is a fair value gap form. But this is too big of a candle, to be honest with you, because then the fair value gap is going to be absolutely huge, which means we're going to have another huge candle to push that up. Hopefully we can just kind of chill now, maybe take out that low over here. Hey Steve. Hey Josh, thanks for the stream. Reasonably new to trading, so appreciate stuff like this. Happy I can help. All I ask for in return is if you click that share button, copy the link, and just like up the stream. Let's see how this goes, guys. Let's see how this goes. I'm going to set an alarm because, you know, I sometimes get lost in the moment, lost in the sauce, and end up just completely forgetting that there's news out, especially when I'm live. So if we just set an alarm for about, we'll do it for 5 minutes. So we got 4:55. We'll do 450. We'll do 450. We'll play it safer. Right. So we do have a fair value gap here. We've just took out this low now, as you can see. We do have the fair value gap form. All we need to do is inverse this in like the next candle or so. Hi gang. Hey Jovan. I don't see time in my graph. Happy to see you here too. Hey Rodrigo, how's it going? Oh, we've pushed down. We're pushing down again. Well, this is not what I wanted to see. And this looks more fundamental than anything really. What has happened? What's being said? What's Trump said? What's Trump tweeted? That's not what we wanted to see at all. We'll add an alert. We'll put an alert in. And we will go back. We'll go over to Bitcoin or something. So, Bitcoin really just consolidating, just completely sideways the past few days. Very messy for the bias as well, to be fair. You know, we want to see this low taken out. But it looks like we've respected this fair value gap here. So maybe coming up to take the high is the better option. Just very messy all around. What does tentative mean on Forex Factory? Tentative means basically we don't know the specific time. It can happen at like any point. near enough. But if we look at Forex Factory, I don't know if TikTok can see this, but it is tentative just after 5 p.m. So they think it's going to happen in between 5 p.m. and 10:30 p.m. But it's not confirmed. Right, and then the 4 hour on Bitcoin, right? So we took out the high, came down and took out the low here. Take out this high, which means we have to retrace to the nearest fair value gap. Where's the nearest fair value gap? There isn't one. So then we go straight to this low here. And the funny thing is, this candle has no top wick, so it could just flip in the next hour. So this could be like all the insider trading. This could be all the insider people literally getting in before the Bitcoin release. And then boom. Not the Bitcoin release, sorry, the speech that we've got in like 10 minutes. So I'd say we're quite bullish here. Bullish on the daily. The 1 hour is about to form a fair value gap after taking out these lows. We've got 17 minutes left on this candle though, so I'm not too sure how it will go. So it's not valid yet. If we go to the 15, consolidating, we could look at targeting this fair value gap here. Maybe this one as well, just below it. If we go to the 5, nice consolidation price action. If we go to the 1 minute, no IFEGs for the entry though. No IFEGs for our entry though. Do I live in Cyprus? No, I do not live in Cyprus. NASDAQ, we will have a look at NASDAQ in a moment. Thoughts on XRP? I mean, honestly, I haven't really looked too much into it. This is a clear manipulation to the upside here. GJ is consolidating after having that massive move down. Right, so we've got news in 15 minutes, guys. Looks like GJ's just melting to the downside, so we're going to completely write off this idea for now. Let's see what gold's saying. So gold on the 1 hour, we were looking for buys, I think. Elizabeth, are you still here? We were looking for buys on the 1 hour. We could get that in the next 15, but again, we have to wait for that 15 minutes. We have to wait for that 1 hour to close. And by the time that 1 hour closes, we will have had news. We will have had a news release. So, also, guys, you know where to go if you want to track this. I'm not affiliated with these guys at all, but I just know that Forex Factory doesn't show you what the speech is saying as it's happening. So go to financialjuice.com. You know, I'm not affiliated with them. They're completely free. Yes, it could mean that we're going to continue up. And also we could potentially use this as a support zone in the future. But yeah, you know, you got to watch those market outlooks. I don't know if you watched today's market outlooks, but we spoke about this in that. I do daily free market outlooks on my YouTube every single day before the stream, as well as streaming for free every single day. Yes, that is manipulation in my eyes. Plus the 4 hours slightly bullish here. We've got a 15-minute fair value up here. Something tells me we've got one on the 30, which we do, which we're tapping into right now. So we probably will respect this. We probably will continue down if we respect this. Now, this could be a nice move up. This could be a nice move up if we disrespect it, but let's see how it goes. This is simple. We could take a sell here. It's against the bias. It's really against the bias, I think. Like if we check the daily again, GJ's crossing. GJ's back up to where we need it to be. But the bias here is bullish. The 4 hour bullish as well. So it will be against the bias, but honestly, 1 minute IFEG could play out nicely. This is like a beautiful setup here. This is literally a textbook trade. Just the bias isn't there. Well, let's see GJ. GJ is pushing back up. Now, we don't have an IFEG, which is very annoying. You know, it's took like 1, 2, 3, 4, 10 candles, and we haven't even disrespected it yet. So, we can't really take a buy here if we inverse this. The FU candle. Let's have a look at big. There you are. See, so we could take this, guys. You know, it's probably right about now would be the last call for this. It's against the bias, but everything else aligns. Dave, we'll have a look at gold in a second. How much are your courses? $500 and $150 monthly access. The $500 gives you a lifetime. I don't think the link's on TikTok though. You have to go to my Discord. But there's a free course in Discord, so I recommend you check that out first. You know, kind of get to grips with what you're getting into. You know, I just want to hard sell you the course. That's not what I'm here for. Like up the stream if you're on TikTok and on YouTube, to be fair, guys. Like up the stream. Let's see this news release. We got a surprise speech from Donald Trump. Surprise speech from Trump. We'll see how that goes. I'm not in this Bitcoin trade, just for clarity. Just to clarify, not in this trade. Are they all talking now? Let's see if we can get this speech up. Let's see if we can get this speech up, guys. We're going to get the speech up. We're going to try to get the speech up. Fed speech now.
have been stuck below that long-term average and losing momentum are not where people are buying the dips. Instead, they're looking at something like an Nvidia that's right at its 200-day and being defended, or something like Broadcom where it's
There we go. This looks good. Bitcoin's moving down. As I said, though, I'm not in this trade. But it could have been one you could have thought. It's a textbook setup. We just don't have the bias there. It's a textbook setup. We just don't have the bias there. Oh, I can hear myself. Great. Yeah, that's exactly what I'm thinking. You know, Mike Pellegrini, if you're still here, looking to long gold, lad, but obviously Powell speech in 10 men. Literally the exact same here. Like, the exact same. So, you don't son right there, I guess. Alright, let's pull up this stream. Gotta wait for it to start. Let's just fix this on here. I can hear you too. Twice. You can hear me twice. Nice to see you here, Mike. Let's get those likes up, guys. Come on. Hate to ask, but it's the YouTube business. You know how it is. Let's see how this speech goes. Any predictions for the speech, guys? Any predictions for the speech? Anyone? What do you think? Do you think it's going to go up or down? Do you think it's going to be bearish or bullish? We do have a Jerome Powell speech, and then, like, tentative just after, we have a Trump speech where he's talking about his new things. I forgot the name. Executive orders. So he's going to be talking about his latest executive orders just after Jerome Powell has finished speaking or testifying to the Senate. USD will go up. Let's pull up the DXY. Anyone else? Any thoughts? Let's see what TikTok is saying. Strong down. I'm not here to predict the news. Is right. Do you trade Dragon on Japan bank holiday? I think it will drop. No, I don't. Bearish, short it. Strong dollar, down. Let's watch the news. Is it up now? Still not. We got 5 minutes, probably. A lot of mixed. Joven. Let me know what's right. Joven. People are saying short. In on TikTok. If you want to watch this stream on YouTube, guys, and you're on TikTok, I think if you join the Discord or just search me up on YouTube, Josh Williams FX, I will pop up. You could watch the whole thing there. But okay. Look, I'm just the messenger, Joven. I'm just the messenger. Ban GJ TP hit. What? Just now? Oh, GU, sorry. I'm blind. Nice work, Junior. Nice work. You think GJ will take the 4 hour before reversing? That's what I was thinking. I don't know if news will do that though. If the DXY go up, will the gold go down? Yes, because XAU USD, right? I need you to focus on, can you see this on TikTok? XAU USD. Right, this USD is the second currency. It's the quoted currency basically. Now if we look at GU, it's the same. EU is the same. It's all quoted against the dollar. So it goes in the opposite way of the dollar. It's basically inversely correlated. Now when you have stuff like the USD JPY, that is positively correlated with the dollar. So if we look at that, if we pull that up, look at USD, look at this, right? And then also look at the DXY. You can see they're very, very similar. This is USD JPY and this is the DXY. Very, very similar. Now, if we look at the DXY and we look at GBP USD, they will be kind of like it'll be like upside down. It'll be the opposite, okay? So if we look at DXY, we look at GBP USD, you can see the correlation here. Like we had 2 massive displacement candles up on GU at 1447. And if we look at 1447 on the DXY, we had 2 massive displacement candles down. They're inversely correlated. Now, gold has a few different fundamentals, but because this is USD news, it will affect it. Sometimes, you know, wars and stuff like that can affect the dollar, but they'll also affect gold a little bit more because gold has more fundamentals. As I said, it's not specific to a country. It is like, you know, universal, I guess. So wars in like Ukraine and Russia, for example, that affected the dollar, but it'll affect gold more. Whereas Russian news won't affect gold, or but it might, like it's messy, you know. I'm not like a proper gold trader like with the fundamentals and stuff, but I just know that gold will be inversely correlated to the DXY, but it might look slightly differently because of the different fundamentals. Whereas GU, EU, AU, all very similar fundamentals to the DXY. Right, surely this is going to start now. Like up the stream if you haven't already, guys. Share, click copy link, share, all that stuff. Let's see if we can get to 40 likes on YouTube. I really need to get glasses or something. I have to squint to read the comments on YouTube. Just not starting. Oh, it's right here. Let's watch this one. There we go. Coverage begins momentarily. Right, come on. Fed Chair, Fed's Powell, we do not need to be in a hurry to adjust the policy. Fed Powell, we can ease policy if the labour market unexpectedly weakens or inflation falls more quickly.
Good morning. This committee will come to order. Chair Powell, thank you for being with us today. I appreciate your willingness to have a chat.
Jevin, you're right so far.
Really important issues facing our country. Without question, the Federal Reserve serves a critical role in the function of our government and the global economy. You have the ability to influence markets and directly impact the financial future of hundreds of millions of Americans. That is why the Federal Reserve is supposed to be an independent institution free from politics. But in recent reality, the Fed has been susceptible to political pressure. Take, for example, the Fed's involvement in the Network for Greening the Financial System, a group dedicated to green financing and climate change, which the Fed joined in December 2020 as President Biden was about to assume office. Just last month, the Fed announced that it had pulled out of the organization as President Trump was getting ready to be sworn in. To the American people, this is flip-flopping in the political wind. Too much focus on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives, which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB. How can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all.
Jeez.
Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences.
I'm just waiting for him to speak, to be honest.
And law-abiding citizens.
Can we turn this down a bit?
On one hand, if you were in the private sector,
Yeah, I'm just waiting for him to start speaking.
your job poorly,
I want Jerome Powell to
you
start
face
speaking.
consequences, reprimands, suspensions, or even being fired.
Yeah, man.
But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit
Just
credit
absolutely
access to
sideways
all
on GJ here.
Americans. And while I'm glad this proposal was not finalized, the uncertainty.
Just absolutely sideways here so far. Waiting for Jerome Powell to start speaking. I think that's kind of like the introductory kind of speech. I think Jerome Powell had an introductory speech, because if we look at this here, you can see this is his, like, think Jerome Powell spoke. But, you know, at the end of it here, he said, "Thank you, I look forward to your questions." So I think this was like the, you know, ARC, Jerome Powell. I think this was kind of like that introductory speech to kind of get, you know, get underway. And since then he hasn't spoke because this guy's too busy talking. So we want him to finish talking and then we'll probably see something actually happen. This is probably why we're consolidating on here as well. It's why we've been consolidating here for so long. If we look at the DXY, it's kind of consolidating, but in a much bigger range. You can see like much bigger range because there's a lot more volatility here and a lot more volume. USD JPY, just look at that. GBP USD. Again, like you can see, like the correlation here, like, you know, massive candle up, pause, 2 down. Massive candle up, pause, massive candle down, pause, 2 up. Now this is going down, which means the DXY should be going up. There we go, you can see the correlation here. I don't really think I need to prove that much more. But let's see. Oh, someone else is now talking.
But I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now,
check Bitcoin.
President Musk and his...
Oh wow, Bitcoin's done its thing here. Did anyone catch this? I didn't, but I knew I threw it up there. Did anyone catch this? I didn't take this. Just to clarify, I did not take this. Oh wow, DB. Nice work, DB. Nice work. Bit risky, but nice to see. Like the stream up, guys. Click share, click copy link. Buys look... buys align with the bias, to be fair. Buys definitely align with that bias. If we look at the daily, you know, respecting this fair value gap so strongly. The 4 hour more recently took out this low here. 1 hour took out the low. The 1 hour's locked in that fair value gap. But we forgot to check the fair value gap on the... Oh, there you go. You can see we respected that there, Elizabeth. If you're still here, we respected this one. It's good we didn't take this, to be fair, because I think... Where was our entry? You were looking for around about here, I think. Be about break even. But again, you know, it doesn't the bias just doesn't align. Nice work, DB, though, for catching that.
To their enemies, even for teachers' aides for kids with special needs. The Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans and Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be. But under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy.
Are we going to test the daily Fed lag up on GJ?
Trump may be happier with you right now, but
we should be. That's the idea.
To please him over the long run will burn the reputation and independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Oh, here we go.
Today we'll hear from the Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you are now recognized.
Let's go.
Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Maximum employment.
The economy is strong overall and has made significant
He said the
progress
economy is
toward
strong.
goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has...
So he's just said it's good. He said it's good. The good economy, and he's going to see that.
GDP
Going to look at that.
2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000
Sol's
per
moving
month
mental.
over the past 4 months.
Sol is also moving.
Following earlier increases,
Solana.
the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in
Thanks, big
balance.
dudes.
The labor market is not
Cheer
a
on.
source of significant
Appreciate it.
inflationary pressures.
Happy I can help.
The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5%.
It's 50-50. Joven versus TikTok. Joven said up, TikTok said down.
In light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be
Economy strong.
to adjust.
The economy strong. Doesn't need to adjust its policy stance. That's good.
Too fast or too much could hinder progress on inflation.
But doing it too fast could hinder
Reducing policy
inflation.
restraint too slowly or too little could unduly weaken economic activity.
So the economy's good. He's got to be noticing that when when they're changing the rates. They don't want to do it too quickly because it could negatively affect us. They don't want to do it too slowly because it could negatively affect us.
In a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not
Exactly.
move
Like up the stream, as Big Deeds says. Listen to Big Deeds, guys. Like up the stream, comment, share the link, etc. Just copy link.
Inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's statement on longer-run goals and monetary policy strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that the Fed will do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
Listen to how he's saying that. He's saying that just because he has to. Listen to that.
And to achieve our dual mandate.
Oh, well, everyone will be okay.
For monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions
He's just saying it.
families and businesses across the country. Everything we do is in service to our public.
You can hear it in the tone.
I look forward to your questions.
And paycheck to
Yeah,
paycheck,
everyone's doing
have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week I held a hearing on deep banking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve Supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir.
Oh.
Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part
GJ's moving up. Oh wow. Oh wow.
Regulators to identify
We did get that move up on GJ.
liquidity risks.
We did get that move up on GJ exactly how I said we would at the start of the stream. We just couldn't find that entry. Bitcoin also moved how we said it would, how I said it would. We just didn't have that bias to take the trade.
Organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on a performance improvement plan, all of which would be expected in the private sectors that just mentioned for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many things.
Oh, DXY going down, Trevor.
Accountability. What we found was
Ooh.
this was not a case of
Sol's going
malfeasance
up.
or nonfeasance
Nice.
so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time.
See how this is also kind of like
It wasn't actually particularly fair to the employees to say you didn't
inversely correlated,
violated their
apart from down here.
in some way. That wasn't
Yes.
really what happened. What happened was
Well, your CGU. If DXY is going down like this, look at GU. It's literally like just upside down.
Bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So, as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and with the number of MRAs that went really documented but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held accountable for that. I'll move on though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? I'll say that this comes after a number of conversations with community banks.
On GBP JPY, Sean.
Continue to stress that the cost of the reg around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better. I'd love to hear your thoughts on that.
All right, first of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look
GBP
on,
USD.
frankly, on debanking. I think we all.
Give us a sec. On GBP USD, we had a break of structure and a solid retest before fueling the move up. On what time frame? On the 15-minute. Where's the solid retest? Down here. The XY is going up there, Joe. I'm thinking it. Sean, do you mean this here to fuel this move up?
Thank you, Mr. Chairman. So over the weekend, Co-President Musk and Acting Director Vogt effectively shut down the CFPB. No more cop on the beat looking out for a family of four in South Carolina facing illegal culture. You know, we're caught on the beat looking at grandma, whose bank account has just been taken off. You know, we're caught on the beat looking out for people getting ripped off by giant credit card companies.
Yeah, right there.
that are charging them for shopping.
The reason we don't enter on fair value gaps, well, first of all, if we look at this,
No longer doing one of its most
we'll go back to that speech in a sec, guys. So, see this move up? Okay. Why didn't we enter? Why didn't we enter here? Why didn't we catch this? Why isn't this a valid entry? Okay. So for that, I think I don't know what the bias is on GEO. The bias is bearish. On the 4 hour. I guess on the slightly mixed. Well, okay, because we didn't know the bias, so we won't use that as an example. But first things first, right? There's not a solid retest on the 15 at all, because we've inversed this one right here, and we've barely tapped into this one. Okay, so there's no solid retest on the 15 at all, but it kind of is on the 30 minute. Again, it's an IFEG on the 30 minute. The 1 hour, like the 1 hour, no fair value up. Okay, so we'll start from the 15. Okay, the 15 inversed this one and formed this one back to back. So in that case, what do? You go up a time frame until there's just one. We go to the 30. There's two here again. So what you do? You go up a time frame until there's just one. There is not just one here. There's two on the 30, two on the 15. Okay, so if we go back to the 15-minute time frame and look at that one, okay, we would want price to bounce up off of this one. Okay, if we're going to respect any, if we're going to trade any in the form of it being respected, we would not look at this one at all. We would just completely ignore the fact it's been inversed and assume if we're going to continue up, we'd respect this one instead. Okay, but the reason we don't trade fair value gaps that have been respected, even though there's a break of structure here, this is not. Don't see this as a break of structure. You need to see this as a liquidity sweep. So there is liquidity all along here. I don't know. Can we draw a trend line on this? Yeah, we can. So there's lots of trend line liquidity here, as well as just normal liquidity. Like you know, above all these highs here, we take that out, which gives us a bearish retracement. Whenever we take a high or a low, we will retrace. Whenever we take liquidity, we will retrace. Here we take the liquidity out on this high, and this high. Take that out, then bounce straight back down to this fair value gap. Okay, the reason we don't trade it, let's just hypothetically say we did have a perfect you know, respect of this fair value gap. Let's hypothetically say this is a fair value gap that we've respected. Okay, the reason we don't trade this is because there's no absolute for when there has been, like, there's no absolute rule confirming a fair value gap's being respected until we've already had the move. The reason you're saying this fair value gap is being respected is simply because we've now moved up all the way over here. Okay, so if this is the point where you'd say it's being respected, if this is the point where you would look for buys, there's no point at looking at it at all. There's no point, because you missed the entire move. Okay, but let's hypothetically, okay, let's go back down here and go, well, what if we say that this is being respected? You would say it's being respected now, wouldn't you? If this was a fair value gap here and we've bounced into it and bounced up off of it like this, you would say it's being respected. Okay, the thing is, there's no absolute rule for when a fair value gap is being respected until we've already moved past it. Okay, like I can show you multiple examples of where this has happened and we've inversed it. Okay, so if we hypothetically say that this is where the fair value gap is being respected, I'm pretty sure I can show you an example now of where a fair value gap is being disrespected after doing near enough the same thing. So if we go and look at a fair value gap, right, we look for an IFEG that's formed anywhere. I suppose here's probably a good example. It's an alright example. But you can see this here. I guess we come back to this, respect it, like near enough exactly how we respect this one, but then eventually come down and inverse it to take out this low over here, okay? So if you would say this one's being respected, okay, and you're right here, I guess, because it has been respected. If you'd say it's being respected because of that, and you go over to this one and go, this is being respected, I'm now going to take buys. You get in for buys, and then you lose. Okay, we've used it's literally the exact same candle formation. So you either wouldn't trade either of them or trade both of them, okay, and lose it. Now the reason this happens and the reason we don't trade fair value gaps that have been respected, one, because by the time we've realized it's being respected, it's way too late, but two, because there's no absolute rule for when it's being respected. There's only an absolute rule for when it's being disrespected. We know a fair value gap has been disrespected. I don't know if TikTok can see this. A fair value gap has been disrespected when a candle closes behind it. That's an absolute rule. We know exactly when a fair value gap has been disrespected. Whereas what's the specific rule like this for a fair value gap that's been disrespected? There is no absolute rule that says this is exactly where a fair value gap's been respected, other than the actual move off of it. That's why we don't trade fair value gaps that have been respected unless we have an IFEG on a lower time frame in confluence with it. Okay. Yeah, guess you could say that as well. But these are the exact same trade. The reason we don't take either of them is because of this. Sorry, TikTok. This. I'm sure I can show you some more examples as well. Happy I can help. Happy I can help. Let's go back to the speech. Happy I can help. Bro is trading GBP JPY after taking liquidity in 4 hours.
When that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. And I think we can do this reasonably quickly. One that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing.
Like up the stream, guys. Like up the stream. Share. Copy link.
We always wanted our banks to be competitive with European banks. I'm just curious, the original proposal that
Let's get center screen.
I'd like your thoughts on this. Was actually to increase our bank's capital by 19%.
There we go.
Which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal,
Is this Trump's speech started yet?
what's your thoughts? Would you make a commitment
No.
that this would be a new?
Oh. Fuck's sake. I don't know what this page is. Google give me a new one every day.
In the largest
Sorry about that, guys. We're back.
And so it'll shake out somewhere in that area. I would
Our
guess.
expectation would be, and the markets would expect that it would be neutral with regard to capital.
In that range, but I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about: is this an appropriate order? Is this payee on the don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks. And we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
TJ going up.
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system, and people depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there look at this, it costs the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised, yes. I can go into some details. We're one thing that didn't
That's
happen
good.
was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. Yeah. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet, and I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you, and thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern, and you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the
Not gonna lie.
Fed supervises those banks.
This is really boring.
How would you determine that relationship?
With the CFPB, so Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under 10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer
Fed
protection, that
member
would be
banks.
CFPB.
Yes.
Okay.
That's
And
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over banks and some
And that's
financial
it.
utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe
And
so.
you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has 10 billion or less in assets, then we have jurisdiction.
Right. So there is a gap. If the hypothetical is true, and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't
Yeah.
supervise.
And I think that's the concern we're all having right now.
She got him.
This concern
She got him.
when we're looking to streamline government, and listen, I'll be the first to tell you, there's a lot of bloat, we need to streamline it, we need to address regulations and overreach, but there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer action law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks at the CFPB.
Thank you. Let me ask you this, and you know, we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are waiting to buy a home. And we know that's still an issue, the high prices right now for homes.
What are you going to do about the high prices of houses?
Rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
So overall, the economy is strong.
That's a good question. That's going to mess the markets up if he answers this wrong.
4%, quite a low level. Inflation last year was 2.6% for the year, so we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remain high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, you know, once we lower rates and kind of rates return.
Once we lower rates.
I don't know when that'll happen.
He doesn't know when it'll happen,
When it
though.
does happen, we're still going to have a housing
But when
shortage.
it does happen, we're going to have a housing shortage.
Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here. My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No.
Oh, short and sweet.
It seems to me that the big picture should not go unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into a recession in order to get inflation down. Do you recall that?
Very, very well.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about China?
No, wouldn't trade places.
How about France?
No thanks.
What about UK? Or
Things
England?
aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want
GJ took out 1 hour high on the 5.
in a second. But the fact is, knock on wood, we have experienced a soft
Yes,
landing.
4 hour high as well.
Not for me to say.
That's what our target was. When I started this stream, I was looking for buys up towards this high over here, hence why there's all this drawing around.
Are we in a recession?
No.
Around here. This guy's bollocking him. But yeah, we were looking for buys towards this 1 hour high. Took that out now. It is also a 4 hour high. So that gives us a bit more of a bearish bias, bearish sentiment.
Know why you don't take the credit?
Yeah, I think he's doing.
He does.
He's like, kind of like, you know, helping him
I'm
out.
not saying things are
Does that
perfect.
make sense? Like he's on his team.
I never imagined that our
Giving his flowers.
And I wanted to thank you and your colleagues for that effort. You sure didn't get any.
Yeah, he's complimenting him. It's like, thank you, you know.
And our president on the fiscal side, I don't expect you to comment on that. You and the Federal Reserve can to a large extent control short rates, can't you?
Yes.
Through the open market committee. You can't control long rates though, can you?
No, you can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many other things go in. Expectations of inflation in the longer run, the sort of risks around
Just
the economy.
very sideways here.
Go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, you know, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to
Gold is pushing a bit now.
explaining to the American people why that is. Final question.
Oh yeah.
If you went home tonight and Mayor Powell, your spouse, said, you know, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and you know, really want to understand better why this is happening. You know, one theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're going to do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them, the CEOs to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reid.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think
Looks like a goblin.
monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference. We've avoided a recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%. The unemployment rate finished the year at 6.7%. By 2024, gross domestic product grew 2.5%. The unemployment rate was 4.1%. Labor force participation rate went up from 61% to 62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman,
I don't know how much longer I can watch this, guys.
that have non-erected barriers, including tariffs, have grown faster and higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, many economists project about $1,200 per year in households will be paying extra, an increase in inflation by nearly 1%.
Let's see what the market's doing.
thoughtful, sensible way.
Gold's just pushing up. It's probably because we're talking about the tariffs now.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman. What would you do if the president tried to remove a member of the Federal Reserve Board?
Well, it's pretty clearly not allowed under the law.
We've communicated back and forth about synthetic risk transfer as a potential danger to the banking system.
I'm good, thanks, Shane. How are you? Nice to see you here.
And could you give us some insight on how we can improve financial stability by regulating these transactions more appropriately?
What we've been doing for some time now is looking at them on a case-by-case basis, and if they really do transfer risk successfully, then that's okay. I mean, it's a good thing if a bank wants to transfer risk off its balance sheet in a way that gets compensated for and all that. But what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis. It was sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfers, as it was the case with synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage, of course, while housing is difficult. Two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible to some?
I imagine it does hold down mortgage rates, the fact that they're sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental.
Yeah, there's a 5-min one here, 4-min, but as I said,
Really a question for
as I said before, when you see back-to-back ones like this, you see one here. Just draw that out a bit better. And a second one like this. You go to a higher time frame and use that one. So if we're going to trade an IFVG here on GBP, JPY and be bearish, we would want to see a 15-minute IFVG because there's two fair value gaps on the 5. We'd want to see a close below this here on the 15 in 6 candles or less.
Consumer would contact us and make a complaint about a bank, even a big bank like JP Morgan, we would investigate, as could the OCC, the FDIC, the FTC. So to characterize it, nobody's out there looking for consumers, I think, is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your state department of banking, because those folks are going to look out for you. I can tell you that because I used to have one of those department of bankings. They did a fantastic job of looking out for consumers. One of the things that has also impacted consumers is inflation. Prices.
I think we're just going to leave this here, guys. Like, I don't really see the point in this. I guess it's important. We're going to track it. We're going to see what the big red pieces of news are. But like, the reason I don't think it's relevant at the moment is simply just because we're not going to be looking for trades now either way. Okay, so we're just going to call it a day here. Honestly, it is boring me. But we got to track it. It is still, don't get me wrong, it's still very important to track this kind of thing. You still need to look at what they're saying. You still need to understand what they're saying, whether it's good or bad for the market that you trade. But again, we're going to see this. We're going to see the important stuff popping up on here in terms of like the red pieces. So we do not need to look at that yet. All we need to worry about is the red stuff. We don't need to watch this anymore. So we're just going to call it a day. I'm not going to be trading after this, so we'll see how it goes. We may do a Discord stream for the Trump speech, depending on what time that speech starts. If you want to see that, join the free Discord, which is in the link in the description. I'm live every single day trading for free on TikTok, on here, and on YouTube. So like the stream if you haven't already, guys. Subscribe if you're new. Join the free Discord, which is in the link in the description or the link in the bio if you're on TikTok. That said, have a good rest of your day, guys. Thanks for tuning in. And honestly, that is pretty much it from me. I've got nothing else to share. It was all right watching it. I thought it was going to be a bit quicker than that, but it wasn't. It kind of took a while. So we're going to call it a day here. I'm going to bounce, go about our day. If you won some trades today, good. Walk away with your profits. Journal the trade. If you made some mistakes, if you did horrible in your journal, good. Journal it. Review your journal. See what you can improve on for next time. If you're trying to take a trade, don't force any. Don't force any. Okay. What time does the Trump speech start? The Trump speech is supposed to start. Well, we don't know when. It's tentative. So anytime between 5 and 10:30 p.m. But that's it from me, guys. Thank you, Elizabeth. Have a good rest of your day, guys. Thanks for tuning in. Make sure you're not forcing any trades. If you feel like you're going to force some trades, go back test, go just read some stuff on psychology. There's other things you can do other than trading to progress towards your goal of being a profitable trader. That's it, guys. Join the free Discord if you haven't already. Like the stream. And that's it from me. See you all in tomorrow's stream. Same time, same place. Have a good rest of your day.